Golden Minerals has just become Mexico's newest gold producer. We started producing gold in January this year from our Rodeo open pit mine in Durango, Mexico. The mine is operating as planned, with production ramping up to full capacity this month. We plan to increase and sustain profitable production by next bringing our Villardena underground mine back into production late this year. Hi, I'm Rehn, President and CEO of Golden Minerals. We are a US-based silver and gold producer with our head office located here at the foot of the Rocky Mountains in Golden, Colorado. In the next 15 minutes, I'm going to introduce you to Golden Minerals' unique assets in the Americas, tell you about our immediate plans to increase production and profitability, our plans to grow through successful exploration, and I'll wrap up with how you can get more information. I will be making forward-looking statements, and I urge you to take the time to read through about the risks involved in our plans. They're detailed here. This can be read at your leisure from our website or also from our SEC filings. So what is our business plan? Now, first, for profitable production in 2021 from our Rodeo gold deposit, and second, to grow that production, that profitable production, and make it sustainable by restarting our operations at Villardena, the high-grade gold, silver, lead, zinc underground mines. Third, we'll continue to grow and create value through successful exploration at our several excellent properties in Mexico, Argentina, and Nevada. Now let's take a look at our unique assets that this potential is built on. We own gold and silver properties in the Americas in Nevada, Mexico, and Argentina. You can see the location of these properties in this map. Each yellow dot represents one of our properties, and the stars represent our regional headquarters, which we have in Colorado, Mexico, and Argentina. Collectively, we own or control over a dozen separate properties, such as a district-scale vein system at Yoquivo, where we've recently had some great exploration success and will continue drilling. That Yoquivo is in Chihuahua in northern Mexico. Also the El Quevar property in Salta province, Argentina, but most importantly, our assets in Durango, Mexico, where we have our mills and Rodeo and our underground Villardena mines. Each of these properties provides its own downstream potential, and I'll talk about our game plan in a minute, focusing first on our assets in Durango. So we own substantial production assets. They're mainly mills, mining equipment, and developed mines. And you can see some of them here in these photos. Now we not only do we control the land that these deposits are located on, we also have the equipment, whether it's to mine, the development of the mines to proceed with the production plans, and the processing facilities to actually extract the value. So these are things that we already own. We don't have to buy them. We don't have to build them. And that gives us the unique advantage of being able to get back into production very quickly at Villardena, like we did at Rodeo. Now, Rodeo is currently operating. We're mining gold. We're hauling it 100 kilometers to the Villardena mill, the oxide cyanide mill here in the lower right. And we're processing at about throughput of 275 tons per day. We're going to increase that to about 450 tons per day by the end of the month once we get the second ball mill online, which is going along nicely and on schedule. Our head grade is averaging about 3.3 grams per ton gold. And so we're recovering right now about 25 ounces of gold a day. And our plans are nearly to double that production as we ramp up to full scale. Now, the next step in our growth plan is to start producing again from our Villardena mines. The underground mine shown here is the portal for the San Mateo mine in the upper right. You can see the scoop tram going down the ramp. The development's all in place. We've mined it before. We've got a very good plan, a solid plan going forward to restart the mine and be able to be making a profit based on silver, lead, zinc production while we stockpile the gold and complete the biooxidation facility that we have planned to increase the gold recovery. So I'll talk more about this here in the next few slides. But first, let's talk about Rodeo. Here's a couple of pictures. One on the lower left shows a recent blast, one of the early stage. You can see we're starting right on surface. It's a very low strip ratio. And on the lower right, you can see one of the first loads being dumped at our mill. So we're very excited and pleased to have brought this on stream, on time, on budget, actually ahead of time. And it's all ticking along very nicely as forecast. So we're on track to complete our production plans for the year and bring the company into profitability. Rodeo's a very interesting mine based on the low startup costs. We spent actually less than $1.5 million bringing it on stream. The local cash cost is around $800 per ounce of gold produced. So at current gold prices of around $1,700 an ounce, there's quite a nice margin on the production. And that's because of the high grade, the low strip ratio. Now we're planning overall initially a 40,000 ounce gold production for the life of mine. We think we might be able to extend that. We're working right now on starting an exploration program on some great targets adjacent to the existing pit that to me look very likely to extend the life significantly. So the initial PEA that we published in April of last year showed about a $25 million after-tax free cash flow over 2+ years from this project. We expect we'll do more than that. That was based on $1,600 gold per ounce gold. And obviously we have higher gold price now. And I personally expect gold prices to go back to more like where they were in mid-year 2020 in the near future. So we've met our milestones very nicely. We had our first gold pour at the end of January, first doré shipment beginning of February this year. We're on track to complete the second ball mill circuit. As I mentioned, that lets us increase the throughput to the 450 tons per day that we'd planned. And that will allow us to complete our goal of the 2021 payable production between 12,000 and 14,000 ounces of gold with some byproduct silver. So our net operating margin will be 11 to 12 million US, and most of that comes in as after-tax cash flow. So that's plenty to make the company profitable as a whole, and that'll be the first time we've been profitable since inception. Now, Rodeo is a great start, and we're really very happy with it. It's going to continue to do well for us, but very important to our plans for increased profitability and sustainability is to bring the Velardania underground mines back into production. We've produced here before. We know a lot about it. There's a long operating history at Velardania. There's been two challenges. One challenge has been the gold recovery. We see a way around that. We can improve recovery by building a biooxidation facility. We're working on that. We're doing the feasibility studies on that this year. I hope to be able to begin construction on that plant next year. In the meantime, we can make money based on the silver, lead, zinc production processing at our flotation plant, which is ready to go. It's been on care and maintenance. It's nearby over at the town of Velardania. And so we're going to try to get started again, controlling the other challenge that we had, which was dilution. Anytime you have a narrow underground vein mine, you're challenged by keeping the head grade to the mill at the levels that you'd planned. And that was one of our challenges. We think we have that under control. We're going to use a two-stage mining process, resu mining, in order to more carefully control the grade. And we'll start that later this year. So that's going to be very interesting, and that will increase our cash flow this year and set us up for using the bioxidation plant once it's finished being built in 2023. We produced a study that shows the economic impact of the bioxidation plant on the Velardania cash flow. The PEA shows significant plus $100 million after-tax free cash flow production profile over about 10 years, assuming some very low price points, $1,300 gold, $16 per ounce silver, which obviously will more than make up for with the current price points that we have for these metals. And so we're going to carry on with our studies, as I said, on doing the feasibility work for the bioxidation plant here. We'll start doing the sulfide production, stockpiling the pyrite, arsenopyrite concentrate that then can be bioxidized to get the gold out later. This will increase our production profile this year by bringing in about, it'll produce about 1 million ounces of silver a year, and then another 1 million ounces of gold in silver equivalences. So 1 million ounces of silver equivalent in gold is what I meant to say, once we get the bioxidation plant running. So this is going to be a substantial benefit to our profitability and our cash flow starting late this year and then working into next year. The project is very robust, and with increases in prices that we all expect to see, given the flood of cash liquidity in the world today. I think we can expect to even see more impact from the Velardania project once it gets running. This is the projected production schedule from both Rodeo and Velardania in terms of gold equivalent ounces. And so you can see that we're starting off with production from Rodeo in blue in 21. We'll be able to start bringing in some of that first production from Velardania into late 21, 2022, in my opinion. So we'll move some of the Velardania production forward a bit. But we've got a solid 10, 12 years of production in front of us, with about just under 300,000 gold equivalent ounces produced over the life of these two operations. And we think we can find more both at Rodeo and at Velardania. So it augurs very well for the company here for the next decade and more. It's a great base. It's going to make us a profitable, sustainably profitable company. And we have significant other exploration assets that we will advance in the meantime. I want to talk briefly about our Yokivo project. It's a project we completed the first stage of exploration drilling here. We had some excellent results. It's an entire district, epithermal gold silver veins. They've been mined historically. We found the extensions of that historical mining. A lot of it hadn't ever been explored. It's in a great part of Chihuahua, easy to get to, and we're very, very optimistic about the future exploration results from the project. Just to show some of these results from what we released in January, we're seeing plus 5 grams gold. We had some very high results over here at over an ounce per ton gold over a fairly narrow vein width. We're just getting started. We know there's at least a half a dozen vein systems, and we'll continue to explore these and see just exactly what this district holds in store. But I'm very optimistic about the potential results. In Argentina, we farmed out, or we have an option to farm out our El Quevar project to Barrick Gold, the world's best gold company, in my opinion. It's a good deal for us. Barrick carries all the costs. They're looking for a huge gold deposit. They're looking for a 5 million ounce gold deposit. We would retain 30% of that, plus an additional royalty on silver production. And the upside here is extreme. this is a great future for the company, assuming success on Barrick's part. They're just getting started. We expect them to be carrying on their project here this year, probably with the drill program starting late this year, early next. So this is a great upside for the company. So all in all, we have some excellent assets. We're in production. We've been re-rated from being an exploration company to being a production company. We're seeing the cash share price to reflect that, and we have certainly we have net asset value based on our PEAs alone of over 160 million US dollars. Our market cap is not reflecting that yet, so we're still trading at a severe discount to our net asset value, and we expect that to improve. It's a great time to enter into an investment in gold minerals. Our shareholder base is diverse. We have a main shareholder, Sentient, a private equity fund out of Australia, holds still about 25%. Hecla Mining Company, based on a plant lease that we had for years with them. Barrick Gold came in for shareholding when we did the option of El Cavar, and then the remainder here is public float. Catalyst coming up in 21, full production at Rodeo, end of Q1. So we'll see the first quarter of full production, Q2, and then we'll see the metrics that I've been saying that we'll meet in terms of gold production profitability. At Velardania, the bulk sample for the bioxidation studies is in progress. We'll have that complete, and then we'll do the engineering studies for that system to be able to build next year. And we'll make formal decisions on resumption of operation later this year, but I fully expect that we can start production at Velardania in 2021. And of course, Okivo, I talked about briefly, we'll do a phase 2 drill program there, and I'm expecting some additional interesting success. And we also are going to start doing some exploration work at Rodeo, where we see some extensions to the current open pit resource just to the north of the pit. So be immediately able to extend that life with any success there in that program. Our share price has done quite well, outperforming the underlying gold and silver values significantly, and this is mostly because of our re-rating as a producer from a previous exploration company. So the market liked what we've done. We'll continue to perform, and I expect to see even a further uprating, if you will, as we bring Velardania back into production. For more information, please contact Karen Winkler, Director of our Investor Relations. There's a lot of information on our website, and